Hello, everyone. I don't have to tell you the market has changed. Inflation is affecting all of us. Interest rates are rising and home prices are dropping. Naturally, home buyers are thinking maybe we should wait a few years before buying so we can get a better price, um, better interest rates maybe. Today, I would like to talk a little bit about that and give you my take on this situation. Here in the mountain communities, small town in California, our average family home rents for about $1,800 a month on average. Rents have increased an average of 12% in 2021. California now has a cap on rental increases of 10% a year or 5% plus the CPI, which is currently over 9%, so it's 10%. That means rents are going to go up 10% a year. That's 180 next year, 198 the year after, then $217, etc., etc. Now let's look at what would happen if you purchased a home in Fraser Park, Lebec, Pine Mountain Club, any of our communities. The average home in Fraser Park sells for around $399,000. Pine Mountain Club is slightly higher at $402,000. There are plenty of homes around here that are lower than that. $300,000 gets you a nice home. Let's take a look, see what it would look like with a $300,000 home. With the current interest rates, mortgage and interest payments would come to about $1,750 a month. Tax, insurance, etc. would come about another $550 a month, more or less. So the total monthly payment would come to about $2,300 a month for a similar home that you could rent for $1,800. Huh. Well, you might think, no question about it. Why should I pay $2,300 a month on a house that I could rent for $1,800? Makes no sense, right? Well, makes no sense not to do that. Let's look into the not so distant future. With the rent increases between 10 and 12% a year, it would take 4 years to reach and then surpass that payment. Within 4 years, rents will continue to go up and quickly reach $2,300, then $2,500, $3,000, and so on and so forth. Every year it goes up more and more. That means within 4 years you will be paying for your own house as much as you would for the rental. Now remember, the house payment does not go up, it stays the same for 30 years. Unless you refinance and pull out cash, which, now you're getting cash. But if you stay in the house for the 30 years and you pay your mortgage every month, you will live rent-free after 30 years. If you add $50 or $100 every month to your principal, that payment pays off, that house pays off even faster. But that's another discussion. We're not going to talk about that today. Now, when you rent, that will never happen. Your rent will go up year after year, and you will continue to have to pay rent until the day you die. When you buy a house, you grow equity as the years go past. The longer you own your house, the higher the equity, and if you find yourself in a tight spot, you can even take out a loan against the equity and get extra cash for that house that you're living in. And there's many other benefits too to that one. But that, again, is for another day. Some of my buyers are saying, well, I don't want to buy right now because the prices are dropping, and I don't want to buy now because I think I'll be paying too much. My thought about this idea is, why continue to pay your landlord's mortgage when you could pay your own? The longer you wait, the more you pay for this mortgage. Even if you buy now and the housing prices drop some more, they will recover and they will go up again. If interest rates continue to go up, as we all expect it to do, your payments will go up. My thought about this idea is, why continue to pay your landlord's mortgage when you could pay your own? The longer you wait, the more you pay for this mortgage. Even if you buy it now and the housing prices drop some more, they will recover and they will go up again. If interest rates continue to go up, as we expect, you will pay more for the house, even if you wait and even if the price does go down. If the mortgage rates go down later, you refinance and you're in good shape. You drop your house payment. People who build wealth over the decades always include real estate, whether it's their own house or rental property, and there is a reason for that. The number one, if you own your home and live in it for 2 years, you can sell that home, and whatever profit you make on the sale is tax-free income, at this time anyways. Now you can buy another home and do it again. You leapfrog your equity from house to house, you take out the cash, and you build your equity. You can do it again and again every 2 years. It's one of the most popular ways working people build their wealth and future. Do you really want to wait and pass up an opportunity like this because you might not get the house at the cheapest price possible? That's just silly. From my personal experience, I can tell you that a home that would have sold for $150,000 in 2015 in Fraser Park is now worth $350,000 or more, depending on its condition, of course. So the homeowner more than doubled their money in just 7 years. Yeah, let's wait. What's really crazy is they didn't have to put $150,000 in. They just had to come up with a down payment and make the monthlies. And they doubled the value of the house, and they can pocket that money tax-free. Yeah, let's wait. Many people missed out on buying back then because they thought the home prices would drop. Well, they did drop a little and then started to rise quickly year after year. When we're looking at inflation, we can see the price of every item we use going up every month. Is it reasonable to think homes will become cheaper? Not really. Just like everything else, homes will begin to become more and more expensive and may not sell as fast as we've seen in the recent couple of years, but they will sell and they will hold their value. And as the rent increases, so will the prices of homes. It is my recommendation that you don't delay and call your realtor, call your mortgage broker, better yet, call me, and let's get you pre-qualified and find that perfect house that will start you down the path of prosperity. I hope to hear from you soon.